our first bit of news this week, I think Jim Cramer, legendary kind of stock jock in the U.S., came out, made a mea culpa here, said, I made a mistake. I was wrong. I trusted management team, not myself. I was wrong. So should we play the clip?
I made a mistake here. I was wrong. I trusted this management team. That was ill-advised. Hubris here is extraordinary. And I apologize.
Okay. What did you get wrong?
I had a belief that there was a recognition that there is an amount that you can't spend. Contrast that, for instance, with Jim Farley, who took a project that was his, Argo, and closed it because it was not ready. It was not near enough. This situation is almost a rogue situation. I had thought there would be an understanding that you just can't spend and spend right through your free cash flow. That there had to be some level of discipline, and I didn't get it. But David, what did I get wrong? I trusted them, not myself. For that, I regret. Okay. I've been in this business for 40 years, and I did a bad job.
He played that, did a mea culpa, and he teared up and said he was wrong about it, and his recommendation on Facebook was wrong, and he felt terrible on it. But I mean, I would say, like, as far as I understand, like the management team at Facebook stated that, you know, it was a 10-year venture, a 10+ year venture. And yeah, the company had a weaker than expected quarter without a doubt, but it has been trending like financially downwards for several quarters. So if his thesis was based on anything that we were going to see in that quarter, yes, it was probably worse than most of the market and he expected. Really, if it was just based on that, then his analysis was negligent. And to me, any buy thesis, if you had a buy thesis on Meta, it would have been a belief in the long-term investment in the metaverse, because this is what they telegraphed that they were going to do. So, which would suggest some near-term pain. So, changing your opinion now, now saying I was wrong and we shouldn't buy, it just looks like he did some very, very cursory analysis going in. And it really, to me, it looks bad shedding a tear. It looks like crocodile tears. And like, I'm trying to distract away from my pathetic analysis, to be honest. I would rather have him say I was wrong. I don't think we need the tears there. And, they asked him, what were you wrong on? And he said, I trusted management. Well, and not myself. Well, I mean, you got to trust your analysis, right? And that's, management is part of that. But your full analysis can't be, I like management, I bought stock. That can't be the full analysis. Seems really like pathetic and cursory analysis to me. I don't know. You guys' thoughts? Yeah,
like he called it a rogue situation, in relation to the company not having any discipline to capital. Like they're investing heavily right now. But I mean, realistically, they're making
we came, a new category. Put it out there too. We came out and said, like, we did our analysis on this company and we wouldn't be buying because of what was upcoming and because we saw the metaverse is a huge risk. Like, I'm not sure how you didn't come to that inclusion versus, the buy, which is, what Cramer.
And especially when management's saying it's a 10-year timeline, like this, we're investing now for the future. Yeah. Like this might not bear fruit for a while. And it is really.
So we're surprised when they have a weak quarter. That seems silly.
Yeah. And that they have to invest heavily to essentially make this new category. I mean, I would kind of say that it's a new category, kind of, really to get people to adopt into the metaverse. And, maybe in 10 years it will be, commonplace. But yeah, I mean, in the near term, I don't see what Cramer was seeing.
Well, it wasn't just Cramer. The entire stock dropped 25%.
Yeah.
It's not just an isolated instance of one television analyst
He was the only one. Yeah. Everybody else was saying sell, and everybody held on for him, and then he lost everybody.
It was just him. Yes, it was just him. That's what we're saying. And it wasn't like the stock hadn't already been dropped. It's down 70% since its highs of This shouldn't have been a shock to anyone. I don't know how a single person who looked into the company more than 30 seconds is shocked to where it's a 25% drop on this earnings.
Yeah.
There shouldn't have been that bit. Like, sure, a drop, but 25% on a mega cap like this is just ridiculous.
Yeah. Yeah. And but like we said, the fundamentals were deteriorating. So it was going in this direction. Mm-hmm. And you looked at other social media stocks, what they were posting, weaker results, getting hit. Yeah. The surprise to me is the surprise. Like being surprised that the results came in weaker is a surprise. Like if somebody was surprised, you know what I'm saying?
So, I know what you're saying.
This was a pandemic boom story as well, right? I mean, it's one of the stories they did very well during the pandemic. Now we're out of the pandemic. So they're, as like a lot of other companies out there that did well during the pandemic, they have to give some of those earnings back. Now we're seeing results come down. There could be other things in play at Facebook as well. I mean, there's been some
the moves at Apple,
the
right?
iPhone, with like the
privacy. Apple privacy.
Yeah, I mean, there's a lot of things going on there. But I mean, in terms of, I don't know what Cramer was really talking about. There's no need to cry, right? I mean, you as an analyst, you do the best job you can to provide an analysis on a company, and if you're wrong on some areas and you find out where you're wrong and you own it, which he said, I'm owning it, but I'm not really sure where the tears come into play. I mean, a grown adult crying over something like, the financial markets is it's just really disingenuous to me. And I don't really like to see it. Just focus on the facts. And, I also don't know what he meant, just like what you said, Ron, about,
I trust they asked him.
Well, I'm not sure what did management say that made you think that this was
he trusted maybe they'd be better stewards of capital. But I mean, they had come out and said it was going to be a long-term investment. We're going to spend a lot of money.
And my understanding, sorry, Brett, do you know what my understanding is that they've invested about a billion into the metaverse?
10 billion.
How much? 10 billion. Okay. So it's $10 billion. Yeah. So that's a very significant investment. Now, to put that into perspective, that's about, like their current market cap, even after all the declines that they've seen. I mean, they've lost about 3/4 of their share price almost in, a little over a year. The current market cap is in the range of like 250 billion. So yeah, that's a lot of money. But that in and of itself would not explain a 25% drop in the share price. The drop in the share price was more just about continued weakness in the financial results. Yeah, there's a lot of negative press on the whole Meta thing, but I mean, it's only been about a year since they changed their name and have really pursued this path. I wouldn't expect, there to be a big change within a year. I mean, this is, you look at other companies that engage in big, like just to take Walt Disney, for example, Disney with their Disney Plus, right? They said straight up, it's going to be 5-6 years before it's profitable. And that's more along the timelines that I would expect for something like the metaverse. Now, I don't own Meta shares. I never recommended them. I don't know anything about the metaverse. So I'm not the best person to talk about it, but I wouldn't expect that it's going to be an overnight thing. I would be more concerned just about the current state of the company's business and ad sales.
Yeah, I think the biggest problem I have with the entire mea culpa there is they give him a chance to say, he said, I got it wrong. That's fine. Then given a chance to explain to viewers what you got wrong, you kind of choke out, I trusted management too much. I mean, if your entire thesis is just, I like management, and I already said this, like, it's not analysis into a company. I'm sorry, you're not doing analysis. So you shouldn't be too choked up. You should be choked up or mad at yourself because that's all you did, basically, if that's your entire analysis. So, I mean, that would be what I would look at it, because like Brett said, anybody who did 30 seconds of analysis could see it was trending negatively in the near term. Like your only thesis would have been a belief long-term in management. And then you were completely, your thesis completely would have had to change at that point because of a poor quarter. Well, it just seems like fly by the seat of your pants analysis. That's all I'm trying to say, really. And I think that's what I'll.
Yeah,
not
one thing I am going to say is that there is a huge amount of risk in what Facebook is doing, and this is something that every investor should understand. When you're basically looking at your company, and you're saying, 5 to 10 years, our current business
so hard to predict,
relevant in the market. So we have to completely transform what we're doing. It's almost like you're becoming a startup again. Like if you look at like what Face or Meta owns now outside of Facebook, there's Instagram, there's WhatsApp, a few other things, but they never developed those technologies. They acquired them. That's why a lot of companies, when they get to Facebook size, prefer the route of acquisition, because developing a whole new business, it's almost like you become a startup again. And
all the risks.
There's a lot of research on it. Like startups that have a lot of money, having a lot of money can actually be a detriment, because you can pursue things, bad ideas indefinitely, or until, that huge war chest runs out. And so I personally, like when I look at Facebook or Meta and like what they're doing, I'd be very cautious about, whether they have the ability, even with all of their financial resources, to really be the leaders of the metaverse, or if the future leader of the metaverse in 5 to 10 years is going to be some startup that nobody even knows about right now. That would be more my concern on a company like that.
I will say they are using Oculus, which they acquired like 2014 or something like that. I'll put up the date. And that's going to be a lot of their R&D right now. Like they just released a new VR headset for about $1,500, which is on the higher end.
US.
So they are trying to get some sort of, US, which before that you're looking at probably about $1,000 at most for even higher end ones.
Yeah.
Besides, for consumer grade, I should say, there are extremely expensive VR headsets. And so they are trying to get something in there. So if they can kind of slow the bleeding, and then a decade out, they have like that big pop-off moment where it just shoots up that parabolic run in revenue, then sure, there's something, but there's just so much risk.
Yeah. I mean, and that's what we hashed out.
Once again, I'm not a
Sorry.
I'm not a metaverse guy. I'm not a gamer guy, but I have to say that is as attractive as the potential of VR is. I don't think it's really.
No, it's not. It's neat.
Right
no,
now.
Not even close.
It's. But I mean, I remember even when I was a teenager, there was VR, and I tried it, and I thought within a few years it was going to really catch on and dominate gaming.
In the Stone Age, there was.
Decades. I know. Now we're hundreds of years later.
Yeah. Anyways,
many decades later, and they're still talking. So I still think it's going to happen, but who knows when? I think that what Meta is trying to do is they're trying to invest ahead, so that when it really does explode, they're basically there with all the infrastructure. Are they going to develop the apps or the app or the system, the platform that the kids at that time want to use? Who knows?
And, we're not, when we hashed out, like we looked at Meta and it screened fairly well in our screeners. I mean, it's a cash rich business that they have 2.5 billion users. Like it's crazy how many users they have, good cash flow they had right up until the last quarter, essentially. So like we hash out, do we like this business? Because it starts to look right now quite cheap. If you look historically at the cash flow it's generated and the price it's trading at now. But they made a visionary bet that we just have no insight into. So we cannot, we know the risks are high, and we're just not comfortable making that bet with our money when we can see other platforms out there, within the FANG universe, if you want to even just look there, that have far more certainty and far less risk and trade at also reasonable prices. So you're looking at the company, you're looking at the risk relative to other businesses that are similar to some degree. And, our determination was, they're making a visionary call going forward, and you have to believe in that. We have no special insight into whether maybe the metaverse works, and maybe it's not Facebook that even is behind it, to be honest. That can happen. But if it works and everything hits for them, maybe it works well 5 to 10 years from now, or it could completely flop. And then you have your downside risk, and the company's invested tens of billions of dollars in this, right? So, at that point, it didn't make any sense for us. It still doesn't make any sense for us right now. So we're glad to have avoided that. There's some other names that we like at this point.